Welcome back. Joining us for markets this weekend, Tommy Grisafi as well as Duwayne Bosse. Tommy, I'll start with you. You know, when you look at whiplash in the markets, a lot of it lately has to do with, is Russia going to extend the grain deal or not? Thursday, they said they would. Is that what provided that steep pressure on prices on Thursday?
One of the many things happening also that we have the fact that Russia didn't really invade Poland. So there was the whiplash up. Anyone who bought those anywhere that day is looking at a pretty good loss now. And so you're seeing unwinding of that. Also, Tyne and Duwayne and listeners, December options expire next week. And December options at the Board of Trade CME Group have the largest open interest of all the option series. So it doesn't surprise me that corn rallied 25 cents off the low the other day, because there's a bunch of people short calls or with positions who never thought we'd go there. And 2 minutes later, they think we're on the verge of World War III, which didn't happen, but is still something that we talk about. So incredible volatility, as all that open interest in December options have to be unwound. And typically we go to a level, maybe that level would be $6.50 in December corn or $14 in November beans or something. We tend to pin to a strike. I think that's part of the volatility.
So we didn't invade Poland. We didn't see an invasion of Poland. We saw this grain deal extended. It seems a lot of bearish news right now, Duwayne, when it comes to the market. So what would it take to excite these markets again and provide that bullish injection that some are looking for at the end of the year?
I think for the next month, the biggest thing that I could see coming in to really help the bulls would be a South America weather scare. And we're not far off that, possibly anyway. I'm definitely not a weatherman, but they've been spoon-fed moisture the last 3 months, getting just enough to keep going, especially in Argentina. And La Nina has been announced this last week that will continue on into January, which should keep them on the drier pattern. So everything looks okay right now. But if you get a weather scare in South America with our tight U.S. stocks up here for all three grains, this thing could get pretty wild yet.
Talking to a lot of farmers, Tommy, they're just not excited to move grain and sell right now. They're just kind of content, waiting to see what happens. If you're a farmer and you do have some grain in the bin, what do you want them to know? What's your advice for farmers to think about as we close out 2022?
Well, congratulations for owning land. That by far continues to be the greatest trade ever in history. And I think the wealth creation in land would give you enough, watching these land auctions trade all across America, is enough of a distraction to maybe not notice that we're leaking in price of grain. So to answer your question, I'd like the American farmer and Canadian viewers, of course, to know that if store and ignore doesn't work, you're going to be paying a lot of interest, 7-8% interest on operating next year for an asset that very likely may depreciate 20%. And a few years of that, and we're going to come into a very high cost of production into 23. That can be a very dangerous recipe for the young farmer who doesn't own the land. So landowners are feeling great, and they should. Their balance sheet looks great. People who are storing, ignoring grain could be in trouble in 23 and 24 time.
Well, and you look at the risk on the table, there are a lot of risk. Infrastructure and, transportation has been one of those. We've seen a little bit of improvement on the Mississippi River, Duwayne. But when you look at basis, we're seeing basis improve in some areas. What is driving that? Is that something that you think is actually a gift right now for farmers that they need to look at?
Oh, they definitely should take a look at it, because basis is something Tommy and I can't trade on the Board of Trade for these guys. Basis is just a local deal where, if they get a really strong basis, they have to take advantage of it. Then we can buy the bushels back if they want to. But, the basis getting this strong this quickly afterwards tells me that our old crop stocks from last year were very tight, and the farmers that are holding supplies are very tight holders because of, like what Tommy mentioned, they probably sold for some very good prices this last year, and they don't need the cash right now. So it's a pretty interesting situation, especially as this futures market dips a little bit. I think those end users will come in. Well, they're already trying to come in and buy some of these grains, under $6.50 in corn. I think they'd be an aggressive buyer, but hard to get it out of farmers' hands, which, maybe is a little bit bullish in itself.
Yeah, well, Tommy, when you look at wheat, we're going to get into that a little bit, seeing some moisture, but wheat right now for some of these farmers that are planting wheat for the first time in years, what do they need to think about?
Will wheat have a 6 in front of it at harvest would be a problem. Did you go plant $8.50, $9 wheat on a Russian headline or a fake news event and we've had plenty of chances to sell wheat. Is anyone really selling wheat? And to the person out there who was short wheat a year ago when the war started, we rallied $4 or $5 in a matter of a few days. So I can understand the fear of selling futures. Or the elevator system. Are they comfortable with having a large short book of HTAs on their books? And do they have the money to hold out and make those margin calls themselves? So the crazy things have happened the last few years. I imagine that the craziness is starting to end. When you look at the overall price of commodities, it feels like we're drifting lower.
All right, Duwayne, Tommy, stay with us. We have a lot more to cover coming up later on the program. But first, we need to take a quick break right here on U.S. Farm Report.